We go. There we go. We got sound. Good morning, you melon heads. Man, technical issues this morning giving me a big pain in the butt. Where's my intro music? I can't start without my intro music. Can't start without my intro. All right. I don't know if you guys could hear me, but I couldn't hear me, and that throws me off. Anyways, good morning. Happy Inflation Day. That's not exactly how I like to start a stream, but we must press on. I love these early morning technical difficulties. Aren't they great? How are you melonheads doing this morning? I see 174 of you in the chats already. Good morning, everybody. Hi, Mom. Hi, Dad. I love you guys. Today is the day we get the all-important CPI release, and everybody in the press is saying inflation has peaked. Oh, they're congratulating themselves and congratulating Jerome Powell. Oh, he solved the inflation problem. Good, great. We can all go to bed, right? Everybody turn all this stuff off. Shut it all down. Inflation has peaked. Problem solved. No, not so much. Not so much. So first, let me straighten something out real quick. I've been seeing a lot of people saying, how could inflation have peaked? I still see prices going up. Prices are still going higher. Inflation is a rate of change, okay? It's not. Inflation doesn't necessarily mean prices aren't going up or are going up, right? When you see the inflation number come down, that doesn't mean prices have stopped rising. That means prices are rising slower, right? So you can have a lower inflation number while prices are still going up. It just means they're not rising as fast, okay? So that's an important distinction. Just because you see prices going up doesn't mean inflation is getting worse. If inflation stays flat, prices keep going up at 8.5% year over year. All right, so that's a big, an important nuance that I think gets lost here. So if we see a lower inflation number, that doesn't mean prices are going down. Oh no, their prices definitely aren't going down. They're probably never going down. Maybe some asset prices might come down if this market ever crashes. But the price we pay for gas, the price we pay for food, it's going to take some major like economic earthquake to make those prices come down. They're not coming. It's not happening, folks. It's just not happening. All right, with that being said, let's shrink my big melon of a head and take a look at what we got going on here. What you're looking at right now, this is bls.gov/CPI, and this is where the CPI data will be published. And more importantly, if you scroll down a little bit, it'll be over here on the side under where it says news releases. And what you're looking at there is still the information from March. So that will update usually within a minute around 11:30. They're usually pretty good about that. All right. Now, if you saw my CPI preview video yesterday that I did, I theorized that CPI would probably come in just a little bit lower than it was last month. And I went through all of the different things that might be driving that. But used car prices is probably the biggest culprit. I think the energy, I went line by line through a couple of the energies. Energy has moved every bit as much as it did in March. So the energy number is still going to come in with absolutely a huge impact. Now, we also are going to see a little bit of the base effect. And the base effect is where we're constantly comparing ourselves to numbers from 1 year ago. Well, about a year ago is when inflation started to really pick up steam, right? So now we're comparing to higher numbers from a year ago. So that could mean the rate of change has come down a little bit, even though prices are still going up. So the base effect is going to be pulling CPI a little bit lower. Energy is probably going to be about flat. Used car prices are going to be not lower, but you're going to have less of an impact year over year. And I just want to show you a couple of things here. This is some of the CPI data from last year, and you guys can see all right here. We were 8.5% for the month of March. That's the number that they read to us in April. And that was a 1.2% month over month number. Now, what they're predicting today, they being analysts, the financial press, I don't know, someone's magic 8 ball, they're predicting 0.2% month over month and 8.1% year over year. All right. I just want to take you through a couple of the things that are going on here. I think the biggest thing that is going to take us lower today, let's shrink me a little bit more, is this right here. This is the Manheim Used Vehicle Value Index, and used cars has been one of the most inflationary categories that's hit the CPI. And used cars, you can see in this chart, were absolutely on a tear through 2021. Now, this is a case where you can see at the end of the chart here, this very last data point, used car prices actually have come down a little bit. I mean, it was inevitable. Parabolic moves like this aren't sustainable. So used car prices have come down just a little bit. Now, that's not going to be as big of a contributor to a lower inflation number as the base effect will be here, because you can see we're no longer comparing ourselves to prices down here. Now we're comparing ourselves to prices up here. So the base effect is going to mean the used car number comes in a lot lower. And I want to show you in last month's number with used cars how that was such a big deal. Here we can see used cars and trucks in the month over month number, and you can see we were at like 2.5, 2.4, 3.3. And then all of a sudden last month for the March reading, we got minus 3.8 on used cars. We're going to see another big negative month over month in the used car category, although the year over year increase compared to March from last year or April of last year is still a big number. Last month came in at 35. So used cars is going to be a very deflationary category here. Right? That's probably going to be the single biggest force pulling down on the CPI reading, which comes out in 7 minutes. Interestingly enough, new cars are still getting a little bit more expensive, so that will take us up a little bit higher. Another thing I want to point out is food, and this is the FAO UN Food Price Index. Right now, food, if you look on this chart, I know it's not terribly clear, but this red line is 2022 average food prices. And you can see food prices were kind of flat, if not just a little bit lower for the month of April compared to where they were in March. Still, I mean, ridiculously high compared to historical averages. Look in orange, there's your 2021 number, and then these two lines down here is your 2019 and 2020 food number. So food way, way more expensive. But again, we're talking about a rate of change here, and the rate of change is coming down. And you've also got this base effect. You have these early 2021 numbers that are rolling off. So now we're comparing ourselves to higher numbers. So food's probably going to come in a little bit lower than it came in last month. And last month, food came in at 1% month over month, 8.8% year over year. So that could possibly drag us a little bit lower. Now, energy is a big one here, because energy, look at the energy index, 32% year over year for energy inflation. All right, that's just ridiculous how expensive energy has gotten in the last year. I mean, that's heat, electricity, gasoline, right? That's a big chunk of the average person's monthly budget, and it's increasing at 32%. That hurts. And some of the big ones here, gasoline 48% year over year, fuel oil 70% year over year, utility piped gas service 21%. So I want to just take a look at a couple of the energy commodities real quick, because we have 5 minutes before the number comes out. Take a look at crude oil, and I did this on my preview last night. The red arrows there are the beginning and the end of the month. We did see a little bit of an uptick in oil prices last month, although not as big of an uptick as we saw in the month of March, because the month of March started pretty much right with the Russian invasion of Ukraine. Although if you actually look at the delta, we had a lot of volatility in March, but the actual change from the beginning of the month to the end of the month wasn't actually that big. It's actually about the same size as the total net change for the month of April. So oil won't really be a big change one way or another. Now, gasoline, that's a different story. Gasoline, we actually saw a bigger increase on whole for the month in April than we saw in March, if you can believe it. I mean, we had that big swing up at the beginning of March, but it came right back down. And we ended the month a little bit higher. We actually had about the same size move for April. So gasoline's not going to be that different than what we saw last month. Natural gas, wow. Big move in natural gas this month. I mean, look at what the price of natural gas did over the month of April. Actually, a bigger move than we saw in March. So natural gas is going to hit CPI harder. So we're starting to see this theme of energy actually just about as bad as it was last month. And home heating oil, wow. Look at that trend in home heating oil. Thank God it's getting warm out. We're not going to need as much heat, although I've had my heat on pretty much up until last night. I finally turned my heat off here in my house. It's been so cold this spring. We're not going to have a spring. We're just going to go winter to summer. But anyway, I mean, a big, big move in home heating oil for the month of April, every bit as big as that move in March, actually bigger than that move in March. So I think energy may surprise here. People are saying, "Oh, gasoline prices came down a little bit, and the president dumped oil from our strategic petroleum reserve and all that." Honestly, when I look at the prices of the commodities, I don't see any effect in energy. I actually see energy being a little bit worse. We'll see how it comes in. I mean, the math that goes into the CPI is a whole heck of a lot more complex than I make it sound. But just looking at the base commodities here, it really looks like energy could come in higher. We are now 3 minutes away from the CPI release. And the last thing we have to talk about is rent. And look, they lie about this every year. I get it. They do their owner's equivalent rent. They said last month that the rent had only risen. What was the number they gave us? The index for shelter had risen 0.5% month over month and only 5% for the year. Yeah, okay, I got a bridge I want to sell you if you believe that number. Because look at these rent numbers here. This is a chart showing rental increases going back to all the way into 2019. All right, so that huge spike in rental increases has not even begun to show up in the CPI index. It hasn't even started to. All right, at some point, they have to start telling the truth about how expensive the rent has gotten. And look at this number here. Rental prices have risen by 17% annually between March of 21 and March of 2022. Meanwhile, average hourly earnings grew just 5.6% during the same period. That means everybody's raise, all of the raises, all of these wage increases have gone just to pay the rent, because the average person pays about a third of their income after taxes for rent and for shelter. So any way you look at it, the rent has gone up significantly higher, and it's got to show up sooner or later in the CPI. I mean, at some point, it's got to show. All right, let's just take a look real quick. The market is expecting 8.1, and I don't know what is going on right now. It's 8:28. We're still 2 minutes away. We're looking at the S&P 500 futures right now, and it looks like a big down arrow. I don't know if somebody caught wind of the report a minute early, but the S&P is currently set to open about 43 points higher. The Dow set to open 281 points higher, and the NASDAQ set to open about 173 higher. Again, that's going to change. I don't like to trade anytime a CPI read or something like that comes out. I try not to get involved in the markets, because the algorithms are looking for headline numbers. They're looking for keywords, and they start swinging and they start making these massive trades 1,000 times a second, and I don't have the reaction time or the amount of money needed to keep up with that, so I don't even get involved in that. I put my trades in place, and I just sit back and I watch. But anything, in my opinion, anything below 8.5%, I think the market's going to rally a little bit, because the market is just desperate for some good news. And look, the narrative is inflation has peaked, and anything coming in below what we got last month, they're going to see that as confirmation of that narrative. It's going to take the market higher. It's going to be a sugar high, short-lived. It's not going to last, because there is just no good news on the horizon for this economy. None whatsoever, and there's a whole lot of bad. So it is now 8:30. I'm refreshing the screen here as fast as I can, because the number is due out any second now. While we're here waiting for the number, I see we got 448 people in the chat right now. Hello, everybody. Won't you please consider subscribing to my channel and liking this video and sharing it with your friends? It would really help me out. And we are just refreshing like a madman right now. Still no report yet published to the website. Let's see. Well, it looks like a big red candle down, so I don't know. Somebody got wind of something they don't like, but I still haven't seen it, because the report has not uploaded to the website yet. Still refreshing, but the S&P is on its way down right now. I guess that means we came in above the 8.1% number, possibly higher than the 8.5. Still nothing on the BLS website. Let me know what you guys think it's going to be. Give me a shout out in the comments. What's your guess? I said 8.3, and it's 8.3. Man, I'm good. Wow. Somebody call the fire department. Jack's on fire lately. Oh, that's right. I am the fire department. Anyway, 8.3%. I'm going to read. This came out, just hit the wire a few seconds ago. The consumer price index for all urban consumers increased 0.3% in April on a seasonally adjusted basis, after rising 1.2% in March. The U.S. BLS reported today. Over the last 12 months, the all items index increased 8.3% before seasonal adjustment. Bullseye, I said it in my video last night. You can go back if you think I'm kidding. I said 8.3%. Increases in the indexes for shelter, food, airline fares, and new vehicles were the largest contributors to the seasonally adjusted all items increase. The food index rose 0.9% over the prior month, and the food at home index rose 1%. The energy index declined in April. I thought energy would go up, so it wasn't a perfect call. After rising in recent months, the index for gasoline fell 6.1% over the month, offsetting increases in the indexes for natural gas and electricity. Index for all items less food and energy rose 0.6% in April, following a 0.3% advance in March, along with indexes for shelter, airline fares, and new vehicles. The indexes for medical care, recreation, household furnishings, and operations all increased in April. The indexes for apparel, communication, and used cars and trucks all declined over the month. The all items index increased 8.3% for the 12 months ending in April, a smaller increase than the 8.5% figure for the period ending in March. The all items less food and energy index, because people don't need food and energy, right? That rose 6.2% over the last 12 months. The energy index rose 30.3% over the last year, and the food index increased 9.4%, the largest 12-month increase since the period ending April of 81. All right, that was a mouthful. So let's look at some of the numbers here. Here is your year over year, the whole index, 8.3%, and your 0.3% number. Food, 9.4% year over year. I thought the food number might come in a little bit lower. It actually ticked up just a little bit, even though the month over month number was lower, but it looks like the year over year came in at 9.4. Energy, I'm surprised to see energy come in lower. I thought energy would be flat, if not a little bit higher. But it looks like a big drop in gasoline. And they're saying a big drop in fuel oil. I'll be honest with you, I didn't see the big drop in fuel oil. I mean, unless they're looking at something different. But when looking at this chart, look at that big spike in home heating oil. I really didn't see it. Again, maybe that's got to do with the math and the way things are calculated. They take snapshots across the month. They don't just take beginning and end. So it's possible that had an effect. Energy services, 80.5% year over year. Look at that. That's a big jump. All right, moving on from energy, we've got new vehicles. Again, I said new vehicles would come in a little bit higher, and they did, 1.1% month over month, 13.2% year over year. And then used cars and trucks, all right, year over year at 22.7%, and that was a big drop compared to what we were last month, because last month I believe it was 35.3%. So we did see a big drop in used cars. And shelter, look at this. They're still giving us this BS about shelter. Can you believe that? Still saying 0.5% month over month and only 5.1% year over year. You've got to be kidding me with this 5% number. They're insulting people's intelligence with this garbage. It's got to stop. Owner's equivalent rent is a 100% BS statistic. It's got to go. I mean, look at this chart. That's people's rents. Does that look like 5% to you? Let's see, 15.5 to 1900. Let's see, carry the one. That's a heck of a lot more than 5%. That's what that is. Anyways, let's see what the markets think of this. Right now, the S&P looks like a big dump at the beginning, gave up all of its pre-market gains. But like I said before, the algorithms are hunting right now. They saw a key number, a key word, and they're just triggering their sells or their buys. It's right now, this is computers beating each other over the head. This is not human beings making trade decisions. I like to sit back and just watch, but it looks like at least the initial reaction, the market did not like this 8.3 number. They were hoping for a lower number than that. The Dow, same deal. The Dow futures now down 17 points, and the NASDAQ now down 70 points, or about 0.5%. So stocks did not like this CPI report. Let's see what we've got. It looks like a little bit of a tick up in yields, but not a big one. Still below 3%. This is the U.S. 10-year Treasury. We'll keep an eye on that one. And gold, actually, gold sold off a little bit. That's interesting. That's interesting. Could this have something to do with the prospects of margin calls and people raising cash? I'm surprised to see this big downtick in gold on that news. You would think gold and silver would do well. Let's see silver, and silver is selling off as well. Still up about 12 cents pre-market, but it's giving that up pretty fast right now, especially considering we were around 21.73 a little while ago. So precious metals selling off along with stocks. Let's see what the VIX is doing. The VIX is climbing at 33.48. Big uptick in the VIX right now. These are about 5-minute candles we're looking at, by the way. So right now, looks like markets not liking this CPI report. 8.3%. If you're just joining me, that is the number. The market was calling for 8.1. Again, I nailed it on that 8.3%. I didn't get my reasoning just right. I thought energy would come in actually a little bit higher, but my number was right on the money. Anyways, we all know this is a bogus statistic. And by the way, folks, while we're here, I want to draw your attention to shadowstats.com. Shadowstats.com is run by a guy named John Williams. And what he does is he calculates inflation using consistent methodology going all the way back to the 1970s. See, one of the things our government likes to do is change the way they measure inflation, and that always makes inflation seem lower than it really is because the government is financially incentivized to do that. Because remember, cost of living adjustments, raises for their employees, Social Security benefits, payouts to veterans, all those things get more expensive with inflation. So they understate inflation, but John Williams has been keeping track using the same methodology since the 1980s, and according to that website, inflation is actually closer to 18% right now, not 8.3 or 8.5. And I see Mr. Jose Orozco. Good morning, Jack, with a cup of coffee. Thank you for the super chat, Jose Orozco. He says, curious your thoughts on savings bonds. To be honest with you, Jose, I don't touch bonds. I really don't. I don't trust the debt market right now. Even, the I bonds, they're supposed to be levered to inflation. I just don't trust the bond market right now. I don't want to be holding IOUs from anybody, not even the U.S. government. There is a mass deleveraging event on the horizon. It's coming inevitably. Is it going to be this week or this month? I don't know. Probably not this week. But when that happens, I don't want to be holding IOUs. I want to be holding assets, physical assets, real estate, and possibly even, ownership in companies. I do not want to be owning anybody's debt. And so I actually don't touch bonds. I have precisely 0.0% allocation into bonds. Although some of the ETFs and things I'm in, if you really, open up the prospectus and look at what they hold, a lot of them hold some money in U.S. Treasuries. So I guess I have some exposure to bonds. But I just don't get into the bond market, to be honest with you. I don't want to be holding IOUs. But thank you very much, Jose, for the super chat, for the support of the channel. I really appreciate that, sir. And let's revisit the markets real quick. By the way, 481 folks watching right now. Thank you so much, everybody. Please like this video, subscribe to my channel, and all that good stuff. And real quick, I want to say thank you to my Patreon supporters, guys. I really appreciate everything you do for the channel, for supporting me. There is a link down below in the description to that if you want to check that out. And look at the S&P 500 futures now. Sell-off is picking up steam, heading lower. The market does not like this report. I'm sure the other indexes are doing the same. Yep, there goes the Dow, now looking to open down 181 points. NASDAQ down 156. NASDAQ selling off harder, 1.3% now, and heading lower. And let's see, have Treasury yields increased? And yes, they did. Treasuries have popped. We're back over 3%. Look out in the bond market. And let's see what we have in precious metals. Gold is now down for the day. Amazing that gold would be down. I really find that hard to believe. Silver's catching a bid here. What do we got? What's going on there with silver? These precious metal markets. Anyways, we're only up 6 cents on the day. It looks like silver wants to head lower. And real quick, the VIX, now at 34. I still got those VIX calls. Devin Bryans, if you're watching, he's been telling me to sell my VIX calls for a while now. Devin, appreciate all your help on that trade, by the way. And I've got Dakota Prairie in the super chats. Hello, Dakota Prairie, and thank you for your support of the channel. Great work on this channel. Spot on analysis. Thank you, Dakota. I really appreciate that. Your kind words and your support of the channel. Well, I wasn't exactly right because I said energy would probably come in a little higher. That didn't happen. But, man, I did say, you can go back and you can watch that preview video. I said 8.3 is probably going to be the number, and I laid out my reasoning why, and I was pretty close. I wasn't exactly right, but I was pretty close. And the number I hit right on the head. So I'll call that one a W. All right. So I just got a text from my moderator, Mish. Hello, Mish. Thank you for everything you do for the channel, brother. And he says core inflation was double at zero point 0.6, and that is why markets are overreacting. That's interesting. Core inflation is when they strip out food and energy. I'm not a big fan of the core inflation number, to be honest with you, because stripping out food and energy, that's like 40% of the average middle class or lower income family's budget. So why do we strip that out and act like, see, inflation isn't that bad if we strip out the most important thing that people spend most of their money on? That doesn't make a lot of sense to me. I hate when they do that because inflation hurts the lower income folks the hardest. So when you strip out food and energy, that's where the lower income people spend most of their money. It's a bigger percentage of their income. So they strip out food and energy to make inflation seem not as bad. And they do that while they're talking to wealthier people in the news who are people who are less affected by inflation or people who actually make money off of inflation because their asset values go up. So the way they report inflation really gets me sometimes, to be honest with you. And I see Tunes and More, otherwise known as Mr. Harry Dan, too. Hello, Harry Dan. Thank you for the super chat and for your support of the channel. He says, well said, when the deleveraging happens, literally anything you can hold in your hand is better than a treasury or any bond. Harry, I appreciate the support of the channel, and I'm right there with you. There's so much paper derivative illusion, it's fake. It's all fake. I mean, there's quadrillions of dollars in the derivatives markets, and all it is IOUs and promises back and forth based on somebody else's IOUs and promises. And once one person starts to break their promise, once that counterparty risk starts, all of that falls apart and all that value just evaporates overnight. When that happens, do you want to be holding paper or do you want to be holding the physical item that all of those bets were wagered on? And that's why I don't get involved in the debt market. I do dabble in derivatives. I trade options. I trade the VIX. But those are not long-term investments. Those are swing trades. Thank you, Harry Dan. I appreciate the sentiment, and I appreciate the support of the channel very much. We are now at 8:43. We are about a half hour away from market open. And let's see what we have. Yeah, market's still heading lower. It looks like the S&P is now set to open down about 25 points or about 0.6%. The Dow's set to open down about 120.4%. And the NASDAQ taking it on the chin, set to open about 140 lower or 1.2%. So, honestly, I think the NASDAQ should be taking this hardest. I've been saying it on this channel for a while. I think the era of the big tech, high multiple, big top line growth companies, I think that era is over. They have dominated the stock market for really the last 20 years, right? The FANG names, the tech unicorns, everybody's been talking about all these things. I mean, look at Rivian, look at Peloton, and then look at the awful quarter that Amazon and Netflix just posted. I think the era of big tech is really over. And I've been saying since the fall, my strategy is now centered around people needing to eat and people needing to heat, i.e. commodities and basics and value. That's where my investment strategy is centered, and it served me pretty well in that time. I've had a pretty good start to the year. Anyways, guys, I think we are going to about wrap it up there. Once again, please, if you're new to the channel, thank you very much for checking out this video. Don't forget to like it and subscribe to my channel while you're here. We do this every month when CPI comes out. We also live stream Jerome Powell's press conferences, and I do my weekly live streams Tuesday morning and Friday afternoon. And once again, thank you to everybody for your super chats, for your support of the channel, and thank you to my Patreon supporters. I appreciate you guys very much. Link in the description down below to that. And we are going to call that one. Until next time, folks, live small and dream big.